FASB is the global accounting body that controls GAAP accounting or provides GAAP accounting guidance. So they're the regulator, or they're the accounting organization that will provide the guidance that all publicly traded companies and all GAAP-based companies will follow.
Okay.
And so they're running the process, and all of their process is public. You can follow it. And the guidance right now that we hear from accountants is that sometime toward the end of this year, they'll give definitive guidance, which means that in 2024, I would suppose, companies that are holding Bitcoin or buying Bitcoin or considering it will have a much stronger accounting treatment, a much more beneficial accounting treatment for carrying it on their balance sheet.
Once the FASB accounting standards are revised later this year, it will instill greater confidence among corporations seeking to include Bitcoin on their balance sheet. The current accounting standards really make it not make sense for corporations to hold Bitcoin. So when we see these changes, we could see more corporations incorporating Bitcoin into their balance sheet, just like Tesla and MicroStrategy have done so far. Crypto family, welcome back to the channel. Aaron here, coming back at you with another cryptocurrency video today. If you're new to the channel, please consider subscribing. We have new cryptocurrency videos coming out every single day. And in today's clip, we're going to check out a clip from Michael Saylor in a recent interview that he did, and he's talking about the FASB accounting standards, how those are going to be changing later this year, the effects that it could potentially have on the market, and also regulations. So really interesting. He explains exactly how it works right now and how when it changes, it'll work. So you definitely want to watch this to the end. But let's go ahead and check out the clip. Let me know what you guys think in the comment section below. Make sure to leave your thoughts down there. Let's go ahead and play it.
It's really not possible for a GAAP-based corporation to buy this in volume when you have indefinite intangible accounting. Indefinite intangible accounting is the accounting treatment you would give to any asset you wanted people not to buy. Like if I was certain I did not want you to buy it, I would assign indefinite intangible accounting treatment to it. Because what it means is you can never generate an investment gain. You can only generate investment losses. They ratchet down to zero. And you can't even book them as investment losses. They end up being booked as operating losses. So if Facebook were to buy $10 billion of Bitcoin and make $100 billion on it, but Bitcoin traded down 50% before they made the $100 billion, what the world would see is that Facebook's core business made no money, that they lost $5 billion in the core business because it's an operating loss. And then the world would think that they had $5 billion in assets instead of $100 billion in assets. So you see, there's no way the CFO of Facebook is going to take that kind of volatility and toxicity on their P&L. It screws up all the operating reporting, and it also screws up the balance sheet. So that's why it hasn't happened. The reason that fair value accounting is so much better is because fair value accounting splits the balance sheet accounting from the P&L accounting. So when I buy the 10 billion, if my core business made 5 billion, then I show a $5 billion operating gain. And then if Bitcoin trades down 50%, I show a $5 billion investment loss. So I separate the two. So investors in about 10 seconds can see that there's no problem with the core business and that the volatility came in the balance sheet. And then when Bitcoin, if it were to go back to 10,000, you'd show a $5 billion investment gain the next quarter. And so you reverse it. And if it were to go up by a factor of 10, you would show $90 billion of investment gains to follow, you see. So, but when you have the gains, when you have $5 or $10 billion of investment gains per quarter, you would separate that from the $5 billion of operating income a quarter. So if you're an outside investor, you can say, okay, I can see this is the balance sheet contribution to the earnings. This is the operating contribution to the earnings. If you're a CFO, you can defend that. Now, imagine if I collapse that and I said, well, there are no investment gains and your operating results are awful. And now you're the CFO and you have to go in front of your outside shareholders and explain how you screwed up the core business and the balance sheet has nothing to show for it. Okay, now you've got a problem, right? So you can't really expect a big publicly traded company with a healthy business and a set of shareholders that understand the core business to really want to get heavily into Bitcoin. That's why the Teslas and the blocks of the world, they've invested, you can invest 5% of your capital or 2% of your capital. But when you get to the point where you invest 50% of your capital and you could have a material swing in the quarter, it becomes very confusing. So yeah, the accounting does matter, and it'll be beneficial when it goes to fair value accounting. If you want to introduce a new asset class, and when's the last asset class introduced into the corporate world, right? Not in our lifetime has there been a new one. I mean, corporate treasurers have basically invested in sovereign debt, treasury bonds or corporate bonds maybe for the last 50 years. So you want to introduce a new asset class. Well, you need to normalize the accounting. You also need to normalize the regulatory disclosures, like the SEC disclosures. There's a lot of nuance about, well, how do I even disclose what I've got on my balance sheet and how it affected my P&L, right? And so the accounting drives that. And then you have to normalize the guidelines for banks. Like, is a bank allowed to own or hold Bitcoin, and how is it treated as collateral versus having real estate loans or securities or sovereign debt on your balance sheet? So, we've been working on this for 3 years, right? The accounting industry's been working on it for 3 years, since 2020. It's 2023, so maybe over the course of 4 years, they will evolve. Generally, the regulators will evolve over 2, 3, 4 years, but I mean, a year is like light speed. It doesn't happen in a year.
No.
4 years is more likely. So I think that when we go into 2024, I think there'll be a lot more clarity about a lot of these disclosures. Just like, for example, the entire crypto industry is now starting to realize that there's a difference between FTT token and Solana and BTC. But 12 months ago, there would be massive debate getting people to accept the idea that there's something like a crypto security. The entire word crypto asset security, that has been introduced and adopted in the crypto industry. But 24 months ago, they didn't have that phrase. Like, people didn't recognize that. They weren't willing to even embrace this issue. So you can't really move forward until the body of industry investors understand the difference between a digital currency, a digital security, a digital token, and a digital commodity. And 24 months ago, people didn't understand the difference. In fact, you have to get every senator.
I'm not even sure I do now, Michael.
Okay, so that's the primary point. Every senator, every congressperson, every governor, every mayor, every billionaire, every corporate CFO, every journalist in the finance industry has to understand the difference between those things before we can move forward. A digital commodity would be an asset without an issuer, like Bitcoin. A digital security would be a digital asset with an issuer, like Solana or like Algorand, where you've got a controlling body that creates the protocol, and they govern it. A digital currency would be a stable coin like Circle or like Tether. It purports to be the US dollar as a bearer instrument and a digital asset. A digital token might very well be like an NFT, like a piece of art, right? It might be a non-fungible token. It might be one of one, or it might be Tom Brady coin, right? The 10,000 superfan coins that Tom Brady issues, and they all get to come to his house for a barbecue every month, right? So if you understand those things to be different, then a digital exchange is something that could trade them all, right?
And thank you for watching all the way to the end of the video. If you found any value, make sure to hit that like button. And like we always say, make sure to leave your thoughts in the comment section below. Love to hear from you guys. Thank you for watching again. My name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.